You know what keeps me up at night? Last December, I got a call that changed everything. It was my 76-year-old mother calling to ask for my mortgage advice because she had received a tax bill that she could no longer afford. Now, my mother and her twin sister are both still carrying mortgages well into their 70s. That's when I knew something had to change. Now, we've talked about mindset, we've covered budgeting, and we've explored debt strategies. Well, now it's time for action because I refuse to let another generation carry mortgages into their retirement years. Today's lesson is crucial. We're going to determine if the offset mortgage is your ticket to freedom or if we need to explore other strategies. Like getting fitted for a custom suit, we need to make sure everything aligns perfectly. So let's talk about what it takes to qualify for the offset mortgage. But first, let me be clear about something. If you don't qualify today, that doesn't mean you're stuck with the 30-year mortgage. We've got strategies for every situation, and I promise you'll leave here with a clear path forward. So let's talk about the 7 key qualifiers. The first thing we're going to look at is credit score. This is your financial report card. We're looking for a 700 or better. Why? Because this loan is like a high performance vehicle and you need to show you can handle it. We're looking for income stability. Now, this isn't about being rich, it's about being reliable. Whether you're that young professional couple making 160,000 plus a year or someone established in their career, stability, i.e., your history of earning, matters more than the number. The lender is also going to look at your debt to income ratio. And here's where it gets a little interesting. We need 43% or lower. Now, I know that might sound strict compared to what you've read across the internet, but remember why we're doing this to avoid being like my mom and aunt and still making mortgage payments in their 70s. Home equity. For refinances and Texas properties, we're looking for 20% equity. Think of it as skin in the game. You're showing commitment to the strategy. The property type doesn't matter so much, whether it's your primary home, a vacation home, or an investment property, we have options. Each type has its unique requirements, but there is definitely flexibility here. For purchases, you can start with as little as 10% down, but remember, the more equity you have, the faster this strategy works its magic. And financial discipline. This is important. You need reserves equal to 10% of your loan amount after closing costs. Think of this as your financial emergency kit. Now, if you're already in a traditional mortgage, don't worry. The transition process is straightforward. You just need that minimum 10% equity, and the rest of the qualification process stays the same whether you're starting fresh or refinancing. Now, let's get practical. Here's what you need to have ready when you go to talk to a banker about this loan: 2 years of tax returns, clean bank statements. We recommend that you minimize any transfers or anything odd going on for at least the 3 months prior to the time you plan to apply. Try to consolidate all of your down payment funds together without having multiple accounts. And if you're self employed, make sure that all your books are updated. Now, here's what I want you to remember: not qualifying today doesn't mean not qualifying ever. If you're not there yet, we're going to create a step-by-step plan to get you there. I want you to focus on paying down credit reported debt, building that 10% down payment, 20% is better, and smart credit card management. Look at spreading your bills across 2 to 3 cards. Do not max out your credit limits, and optimally, each card should be under 35% utilization. And remember why we're doing this. It's not just about numbers on a page. It's about making sure you're not making mortgage payments in your 70s. It's about creating a different future than what 41% of homeowners over 65 are currently dealing with. We don't want you to be one of the 10.5 million people at age 65 that are still sending in mortgage payments. And before our next lesson, grab your workbook and complete the loan qualification checklist. Be honest with yourself. This isn't about judgment. It's about creating your path to freedom. And if you find you're not quite ready for the offset mortgage, stay tuned. Our next lesson is packed with powerful strategies to accelerate any mortgage payoff because no matter where you're starting from, there's always a path to financial freedom.